Want to avoid the most common investing mistakes? In the last 5 years, I've managed over $400,000 across multiple portfolios. Along the way, I've made mistakes and I've been through multiple crashes, but I've also learned 7 powerful lessons. One that can save you stress, money, and rookie regrets. And in this video, I'll share them all in just 5 minutes. I'm Steven, founder of Personal Power-Ups. Let's dive in. Lesson 1. Your psychology matters more than your strategy. Everyone wants the perfect investing plan, the best ETF, the right asset mix, the smartest timing. But none of that matters if your emotions run the show. I've seen it in myself and in others. Fear during a dip, greed during a bull run, impatience when things go sideways. You can have a flawless strategy on paper and still mess it up if you panic sell or jump ship too early. What I've learned: your mindset is the real foundation. Staying calm, zooming out, trusting your plan, that's what actually builds wealth over time. Lesson 2. Doing nothing is a strategy. In 2020, I watched my portfolio sink fast. My gut said, sell now. But I held. A month later, full recovery. Same thing in 2022, and again in 2025. The hardest move in investing is often no move at all. Doing nothing takes guts, but is often what protects your gains. Lesson 3. ETFs are better than individual stocks for most people. When I started, I only invested in individual stocks. I still dabble in individual stocks, it's fun, but let's be honest, it's also a roller coaster. If you don't have the stomach for 30% drops in a week, I'd stick with ETFs. They are diversified, low cost, and way less emotionally draining. They may feel boring, but boring builds wealth. Lesson 4. Dividend yield is not the same as free money. A 10% dividend yield sounds alluring, right? High yields look great until you realize that many of those companies are bleeding cash. Dividends are nice, but they're not magic. If the business behind them is shaky, those payouts won't last long and the value of the stock will collapse, which is also called a dividend trap. Lesson 5. The market is highly irrational. Good companies fall, bad companies boom. The market runs on emotion, hype, and fear, not just logic. So if you're trying to make sense of short-term swings, you'll drive yourself crazy. Instead, zoom out, stay the course, and stop expecting the market to behave in a logical way. Lesson 6. Starting is the hardest part. I waited, I read, I researched, I waited some more, but once I finally invested, even with just $100, everything shifted. You stop spectating and you start learning. Action beats theory, so get started, even if it's just a little bit of money. Lesson 7. Where you live matters a lot. This one is often overlooked. Here in the Netherlands, we pay a high tax on our investments every single year, even if you didn't sell anything and your investments lost value. You pay tax on fictional profits. In the US, you can hold ETFs tax-free in a Roth IRA, and even if you don't, you'll pay a much lower tax on your investments than here. So your location, huge impact on how much you actually keep and how fast your investments are able to grow. So investing isn't just about returns, it's also about the system you're investing inside. If that system punishes good financial habits, it may be time to look elsewhere. 5 years of investing taught me this: building wealth isn't about being perfect, it's about being consistent. So it's all about good habits. Want to upgrade yours? Watch this video next to learn a powerful system to boost your habits. Thanks for watching and see you next time.